Cost accounting involves measuring, recording, and reporting product cost. Companies determine both the total cost and the unit cost of each product. The accuracy of the product cost information is critical to the success of the company because this information determines which products to produce, what prices to charge, and how many units to produce. Let's review some concepts from the previous chapter. Each manufacturing cost component, direct materials, direct labor, and manufacturing overhead are product cost. Product costs are those costs that are a necessary and integral part of producing the finished product. Remember, we record product cost as inventory. These costs do not become expenses until the company sells the finished goods. At that point, the company records the expense as cost of goods sold. I'd like to review one more concept from the previous chapter, and that is manufacturing overhead. Remember, manufacturing overhead are costs that are indirectly associated with the manufacture of a product. These costs include indirect materials, indirect labor, and then we have this other indirect cost, and that's going to include depreciation on the factory building and machines, insurance, taxes, and maintenance on the factory facilities. The other thing I just want to point out is our period cost. Again, these are going to be our non-manufacturing costs, and they will include any selling and administrative expenses. There are two basic types of cost accounting systems, a process cost system and a job order cost system. A company will use a process cost system when it manufactures a large volume of similar products. Production is continuous. Examples of a process cost system are the manufacturing of cereal, the refining of petroleum by ExxonMobil, as well as the production of ice cream by Ben & Jerry's. Process costing accumulates product-related cost for a period of time, such as a week or a month, instead of assigning cost to specific jobs or job orders. In process costing, companies assign the cost to departments or processes for a specified period of time. We will actually discuss the process cost system in the next chapter. Our focus in this chapter is on job order cost system. In this system, companies assign cost to each job or to each batch of goods. An example of a job is the manufacture of a jet by Boeing or the production of a movie by Disney. An example of a batch is the printing of 225 wedding invitations by a local print shop or the printing of the weekly issue of a Fortune magazine. An important feature of job order costing is that each job or batch has its own distinguishing characteristics. For example, each house is custom built, and each printing job is different. The objective is to compute the cost per job. At each point in the manufacturing of a product or performing a service, the company can identify the job and its associated cost. A job order cost system measures cost for each completed job rather than for a set period of time. This slide illustrates the recording of cost in a job order cost system for Disney as it produces two different films, an animated film, which is Job 9501, and an action thriller, which is Job 9502. Let's take a look at Job 9501. Again, as Disney is making this movie, it's going to incur cost. Again, the cost will be the computer programmers, the musical composers, the voiceover, as well as the animation talent. As they incur those costs, they are going to assign it or allocate it to Job 9501. Whereas the costs that are incurred for Job 9502, which is the action thriller, again, those costs, the costs of the actors, the stunt people, set design, caterers, insurance, location fees, again, as that job incurs all those costs, we're going to allocate it to Job 9502. The objective of a cost accounting system is to determine, in this instance, the cost of how much it costs to produce job 9501 as well as 9502. The flow of cost, direct materials, direct labor, and manufacturing overhead in a job order cost system parallels the physical flow of the materials as they are converted into finished goods. Companies accumulate manufacturing cost in raw materials inventory, factory labor, and manufacturing overhead. They then assign manufacturing cost to the work in process inventory account. When a job is completed, the company transfers the cost of the job from the work in process inventory account to the finished goods inventory account. When the goods are sold, the company transfers their cost to the cost of goods sold. Let's illustrate the flow of cost using the production of a fire truck. There are two major steps in the flow of cost. The first is accumulating the manufacturing cost incurred, and then secondly, assigning the accumulated cost to the work done. The company accumulates manufacturing cost incurred by debits to raw materials inventory, factory labor, and manufacturing overhead. When the company incurs these costs, it does not attempt to associate the cost with specific jobs. The company assigns manufacturing cost incurred on specific jobs to the work in process inventory. When a job is completed, the company transfers the cost of the job to finished goods inventory. When the products are sold, the cost is transferred from finished goods inventory to the cost of goods sold account. To illustrate a job order cost system, we will use the January transactions of Wallace Company, which makes custom electronic sensors. To illustrate, assume that Wallace purchases 2,000 lithium batteries as well as 800 electronic modules for a total cost of $42,000. When Wallace receives the raw materials it has purchased, it debits raw materials inventory, and in this case, it's going to credit accounts payable for $42,000. At this point, Wallace makes no effort to associate the cost of materials with a specific job. Some of a company's employees are involved in the manufacturing process, while others are not. As discussed in the previous chapter, wages and salaries of non-manufacturing employees are expensed as period cost. Costs related to manufacturing employees are accumulated in factory labor so that they are included as a product cost. Factory labor consists of three costs: gross earnings of factory workers, employer payroll taxes on those earnings, and fringe benefits such as sick and vacation pay. Companies debit labor cost to factory labor as they incur those costs. Let's assume that Wallace incurs $32,000 of factory labor costs. Of that amount, $27,000 relates to wages payable and $5,000 relates to payroll taxes that are payable in February. The journal entry to record factory labor for the month of January is to debit factory labor for $32,000 and credit factory wages payable for $27,000 and employer payroll taxes payable for $5,000. A company has many types of overhead costs. If these overhead costs, such as property taxes, depreciation, insurance, and repairs, relate to overhead costs of a non-manufacturing facility, such as an office building, then these costs are expensed as period costs. If the costs relate to the manufacturing process, then these costs are accumulated in manufacturing overhead to ensure they are treated as a product cost. Let's assume Wallace Company incurs $13,800 in manufacturing overhead, which represents the cost of utilities, insurance, repairs, depreciation, and property taxes on the manufacturing facility. The entry is to debit manufacturing overhead for the actual cost and credit either an asset or liability account depending upon the cost. In this exercise, part 1 is going to focus on preparing the journal entries to accumulate manufacturing cost. The solutions to this slide will be provided in the next video.